Good morning. This is Scott Love with A to Z Insurance, your trusted choice, independent agent. A lot of people have trouble understanding their homeowner's insurance policy. In the next two videos, we want to try to explain the main coverages on your homeowner's policy. There are two main sections on your homeowner's policy. I'm going to show you a sample of what it looks like here. If you look here, you will see that there are two main sections. There's a property section and there's a liability section. And those are the two sections that we want to look at in the next two videos. The property section is composed of four main coverages: coverage A, B, C, and D. Coverage A is the dwelling coverage. This actually covers the main structure and anything attached to it. This would include the garage, the porches, the pools, and the screen cages that are attached. Keep in mind that this coverage is not the real estate value of the house, but rather the current building code rebuild cost of the house, including debris removal, and insurance companies also want to cover the event of a catastrophic loss when building supplies and labor would skyrocket. This sets the foundation for the whole policy. The next coverage, coverage B, is other structures. This is anything detached, like a shed, a fence, detached garage or carport, a gazebo, these types of things. Typically, a homeowner's policy will give you about 10% of the building coverage for this coverage. For example, on a $200,000 replacement cost on the dwelling, 10% of that would be $20,000 to cover your other structures. Of late, insurance companies have recognized that some people don't have anything detached if they're in a deed-restricted community. So they've allowed people to customize and perhaps even reduce this coverage or delete it completely if they have no detached structures. Coverage C is personal property. This is all your personal belongings, your furniture, your clothing, your kitchen utensils, everything you own. If the house was turned upside down, everything that would fall out would be your personal property. Typically, this is covered at 50% of the building coverage. So again, with our example of a $200,000 house, 50% of that, you would have $100,000 worth of coverage for your contents. Again, this coverage can be customized by most carriers to fit your individual situation. The last coverage is called coverage D, loss of use. This covers your food and motel reimbursement if your house is damaged or completely destroyed and you have to live somewhere else. So while you're staying in a motel, an apartment, having to get food from an outside source, it reimburses you for the loss of use of your house. Typically, this is about 20% of the building coverage. In our $200,000 rebuild example, 20% of $200,000 is $40,000 to cover that cost. Next time we'll cover liability. Thank you.